Hello, listeners. I'm Aashay Choksey, Vice President and Sector Head for Banking at ICRA Limited. And through this podcast, I'll be sharing our views on the banking sector. Earlier in December 2022, we had revised our outlook on the banking sector to positive from stable. We continue to expect the underlying factors driving our positive outlook to remain supportive over the near to medium term. These factors include asset quality, which in our view should remain at much better levels on the back of lower fresh slippages, which along with reasonably strong credit growth will drive improvement in headline asset quality metrics, with GNPA and net NPA percentage lower than 3% and 1% by March 24, which will be their respective decadal lows. This itself should be a harbinger for lower credit costs and support earnings. This apart, credit growth has continued to remain reasonably strong, which, despite a relative moderation from stronger levels seen last year, will be meaningful. However, in recent months, banks have remained cautious while hiking the deposit rates, although the deposit base would continue to reprice upwards with the renewal of deposits at higher rate. Over and above this, the ability of the banks to hike lending rates is also expected to get constrained as bond yields have cooled off, which could pressure banks to be calibrated in hiking their benchmark rates in order to remain competitive vis-a-vis the bond markets. Viewed together, these two factors would collectively exert pressure on NIMs. However, despite this, with benign credit costs, we expect the ROA for the banking sector to remain at or above 1% in FY24. Given our outlook on earnings, we continue to remain optimistic that most banks will continue to remain well placed on capital in financial year 24, although few banks may choose to raise growth capital. Moreover, with lower net NPA levels, the solvency profile for the banking system would also remain fairly comfortable as well. Thank you for listening and stay tuned for our upcoming podcasts.